The truth is not what you want it to be. It is what it is, and you must bend to its power or live a lie. Miyamoto Musashi. Now, I would change the end of that for us about you must bend to its power, and I would add instead of or live a lie or go broke. That's what I would put in there. And for us, that is the truth that if you don't look at what's actually going on in the market and realize that it's real, it's not your opinion that counts, it's what the price movement is doing. It's what I love about martial arts. Everything goes out the window the minute you get punched in the face. When it's you in the ring, and that's what this is. This is a solo game. This is not a whole team effort. It is each individual out there fighting for your own survival in the market. How do you do that? You train like you're gonna play, because that's what it's all about, is real money in the market at some point, really out there playing, putting your resources on the line. Now, it may be quite a while before you actually go out there and start doing that. And what we talk about doing here, because we're not a stock calling service, we're not a Bitcoin or a gold or a commodity or a bond calling service, we're an education firm. We want you to practice. It doesn't cost anything but your time, which is, of course, your most valuable commodity. 10 to 15 minutes a day. That's why we keep it short and sweet. That's all we ask. Spend it with us. Practice. You will understand this, but you've got to focus on the biggest thing of all, and that is price movement. That is our reality. That's all that's real. It's not what the talking heads on CNBC or Bloomberg or anywhere else say. It is what is really happening. And we use what's happened in the past, and we use various formations, indicators, all sorts of things to help us determine what has a high probability of happening in the future. Let's jump into these charts. We see stocks are up for the day, bonds down, gold up, Bitcoin down. Let's jump into these charts. And I need to adjust my charts because I'm in the post-market right now. Going to go to regular hours. There we go. We see the SPY, Standard & Poor 500, those 500 big international companies up 0.82%. Now, we had 3 weeks of strong down movement. That started slowing down substantially last week. A little bit of an up move as far as an up candle goes. It's nowhere near engulfing all of that strong down movement. Price percent oscillator slackening off in its down move. Derivative oscillator actually losing some momentum. Green spinning, top right now, open box. 2-day. We see that 2-day penetrating the weekly and the 2-day trend line, still negative, but heading up. Derivative oscillator just holding on to a little bit of negativity, losing that downward push. And we look at the half day. It has been positive for a while. Let's go back there and take a look. It crossed over going up in the afternoon on Friday, the 28th of January, popped up, ended that up move, that strong up move, back on Wednesday afternoon, the 2nd of February, down for a day and a half, and then pretty much sideways. Did get some up movement at the end of the day. Price percent oscillator moving up. Derivative oscillator losing downward momentum, still negative. That's interesting to see the price percent oscillator still in a positive position, but that derivative oscillator negative. That's that sideways slide with some down movement for 2 half-day periods. So again, we'll keep our eye on things. Overall, still have, a lot of downward pressure with that price percent oscillator down, but, we've seen some up movement. What about the Qs? Let's move on to the Nasdaq 100, the tech stocks. We have a red spinning top this week, a green spinning top last week. So again, some negativity there. Up for the day, 1.12%. Price percent oscillator still heading down. Derivative oscillator quite negative, losing some downward momentum. Go to the 2-day. And again, almost a green doji right there, still below the weekly and the 2-day trend lines, unlike the S&P. you can see where it's actually pushed up more. Derivative oscillator still just barely negative. Price percent oscillator a little more than flat on the negative side of the signal line. Half day, very similar. Up movement, down movement, sideways slide up at the end of the day, pushing through the weekly and the 2-day there. Derivative oscillator likewise on the S&P, still negative. That price percent oscillator positive. So again, still have downward pressure. I'd say a little bit more of it on the Qs. We look at 20-year bonds up down 0.67%. We have a down red candle forming, hitting a lower low. Price percent oscillator pushing down. Derivative oscillator gaining downward momentum. We had that weekly vertical crossover back on the week ending the 7th of January. Was down for 2 weeks, sideways for a week, and then we're going into the second week of resumed down movement in bonds. Now you might say, do I have to buy puts? I don't know a lot about options. Well, for our Patreon members, you have that 3-part training, Option Made Simple, the Charting Wealth Way. If you're a Patreon member at any of the 3 levels, I hope you've taken that. If you've not, put that on your schedule to take. If you'd like our training, then consider supporting the free work that we do here at chartingwealth.com by following that link in the show notes, or just going to Patreon, looking up Charting Wealth. Support us in any of the 3 levels, and we'll send that package to you with so much more. So what can you do if you're not into options? Well, of course, you can go to something like Tango, Bravo, Foxtrot. What is that? That is the ProShares short of TLT. And it is set up with derivatives and the guys that manage it to move opposite of what's going on with TLT. So when TLT, 20-year bonds, are going down, TBF is going up, which is what we see here. Nice up move. Now, some of you ask me, hey, Tom, when I jump into a short, do I then switch over to the TBF chart? I don't. You could. I don't. I just continue on the chart that I use all the time, that I already have everything set up on with my trend lines and everything else. That's what I do. You can look and see the price is substantially different. It's only $17.04. How is that? It's priced differently, but it moves the same percentage. So you buy $1,000 worth in your practice account of TBF, it's going to move. If you look over and you see that TLT has moved down 0.67%, then TBF is set to move up about that. Now, they do reprice it on a daily basis. Typically with these inverse funds, they're higher fees. So again, I want you to practice that. See if that's the thing for you. See if options are the thing for you. If you want to go short in the market. Nobody says you have to do that. If you don't like that idea, then just stay out and you ride things up when they go up. Nobody makes us trade. We're not in the professional markets. We don't have to move money every day. We're not in that rut, and that can be a real problem. So what do? You pick the things that work. You pick the things that work. My friends, if you just, once you do start real money trading, if you can just make 2% a month, you can clear that a month, okay? Think about that. That's 24% a year. If you can just do it 10 months out of the year, that's 20% a year. You double your money in every just few years, you're doubling your money and doubling that double again and doubling that again. And of course, if you have a number of years to trade, you got a lot of time to build up a lot of wealth with just simple stuff. So you don't have to be greedy. What was that quote yesterday at the man who wants to make a fortune in a day will be hanged within a year? Leonardo da Vinci said that. Again, take your time. Learn this. I tell everybody, if you will learn this and really understand it and master it, you'll make up for all the time you spent learning it. Don't get out there and gamble. The house always wins in that scenario. So we see bonds trundling down on that half day. Well, that's the weekly chart. Wait a second. On the 2-day, we see this latest 2-day chart pushing over well below the weekly and the 2-day trend line. Red derivative oscillator heating up, price percent oscillator, a hockey stick cutting over. And there's our half day, down in the morning, up a little bit. right, moving down that trend line nicely. Price percent oscillator heading down. Derivative oscillator about flat because of that slowdown in the down movement's what that is, that solid green candle in the afternoon. That's where we are on bonds. Let's go to gold. And on the weekly chart, what do we see going on with gold? We got a nice green candle forming there for the week. It's good to see one again after 2 weeks without one. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining a little upward momentum today. Nice green candle there. Don't have a crossover yet, but it's heading up. Derivative oscillator is red, but losing downward momentum. What about the half day? Half day crossed over in the afternoon on Thursday, slid sideways Friday morning, popping up a little bit Friday afternoon, and then up Tuesday and Wednesday, ever so nicely. Derivative oscillator heading up with the price percent oscillator. Beautiful up for the day, 0.31%. I love gold. I love to trade gold. I love to see GLD moving in the right direction. One thing about GLD is there's really not a good short fund for it. The reason? There are short funds, but they're very illiquid. How do you determine liquidity? There's between the bid and the ask. If it's a few cents, if it's a nickel, that's a very liquid ETF, stock, whatever it may be. If it's $3, $5, that's not liquid. I don't like that. That's the problem with gold inverse funds. So if I want to short gold, I typically look at puts. Now, let's move on to Bitcoin. Down for the day a little bit, but we got some good news to report. As you can see, we have a 2-day crossover going up. Nice to see that in Bitcoin. On the weekly chart, price percent oscillator flat, derivative oscillator losing downward momentum, green candle forming for the week. The first we've seen since the topping back on the week ending the 12th of November last year, and then the big down hammer. So we go from the weekly to the 2-day. That's where you see the price percent oscillator crossing over the derivative oscillator turning green. We see building green candles pushing through that weekly trend line. That's beautiful. Does that mean we're jumping all into Bitcoin? No, it doesn't. This is just the 2-day chart. It's not the weekly vertical crossover. We'll wait, keep our powder dry, and look for that to occur before we jump into a Bitcoin practice trade. What do we see going on? Well, you see a little bit of a slowing there. After a lot of exuberance building for 2 days, today slowed down a little bit, 0.73%. You can see that reflected in the price percent oscillator. Derivative oscillator still oscillating upward from those 2 building days. So again, leading indicator, triple smooth version of the relative strength index is what the derivative oscillator is. Of course, we covered that in our book, Charting Your Way to Wealth. Price percent oscillator is a percentage version of the MACD. So again, those of you MACD fans, this is a better version, we think, of the MACD. So that is where we are on Bitcoin. That's where we are on all 5 of the ETFs and Bitcoin that we follow. That's where we are, folks. We so appreciate you being with us. I did put out a new In the Driver's Seat today talking about average true range and how you can do that to help you set your stop loss. It's particularly helpful when you've got a volatile stock or ETF and you're trying to figure out how to set that. But when you do use average true range to do it, and I encourage you to listen to that training, make sure that you understand how much of a stop loss percentage that is of your investment. Again, just because you choose that number doesn't mean that it's necessarily right for you. It just may be too volatile that you don't want to risk that much in your trade. So again, practice makes perfect. If you try these things out without any money in the game, you can learn from them and not crush your account. And we want you to learn what you're doing before you start spending money. That's where we are, folks, as we end the day. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.